Okay, guys, so in this video, we're going to be talking about the ridiculous Q1 2020 for Netflix. Netflix just reported earnings today, and I'm recording this video in the after hours of the stock. So we're going to talk a bit more about what happened with Netflix Q1 2020 earnings report and where I think the stock is going in the next couple of weeks and a couple of months. So let's get right into it, guys. So I'm over on thestreet.com. So as you can see here, it says Netflix logs big subscriber gains, Q1 earnings live blog. Netflix kicked off tech earnings season after the close on Tuesday in a big way, reporting Q1 net subscriber adds of 15.77 million versus expectations of just 8.2 million as stay-at-home directives significantly boosted results. So guys, the stock actually shot up like 10% in after hours trading, and that now it's come back kind of basically to the same price, but I would think that this stock is going to do very, very well in Wednesday's trading session. So obviously Q2 results are a little bit more tame. They only forecasting 7.5 million ads, but the good thing is that their free cash flow is doing a lot better. So it says Netflix also said it expects 2020 free cash flow of -1 billion compared to prior guidance of -2.5 billion. So let's go right actually to that shareholder letters. Okay, so here we are in the shareholder letter, and one of the things that I like about Reed Hastings is that he puts a lot of time into his quarterly shareholder letters, so they're very long, and he talks about the business in great depth. So if you guys are looking for not only good information about Netflix stock, but just good information on business in general, they're fantastic reads. So I just want to read the first part. He said, in our 20 plus year history, we've never seen a future more uncertain or unsettling. The coronavirus has reached every corner of the world. In the absence of a widespread treatment or vaccine, no one knows how or when this terrible crisis will end. What's clear is the escalating human cost in terms of lost lives and jobs, with tens of millions of people out of work. At Netflix, we're acutely aware that we're fortunate to have a service that is even more meaningful to people confined at home, in which we can operate remotely with minimal disruption in a short to medium term. Like other home entertainment services, we're seeing temporary higher viewing and increased membership growth. In our case, is offset by a stronger U.S. dollar depressing our international revenue, resulting in revenue as forecast. We expect viewing to decline and membership growth to deaccelerate as home confinement ends, which we hope soon. So guys, he talks a lot more in depth about how things that Netflix has done to cope with the absolute explosion in activity as people are sitting at home quarantined and during the lockdowns and stuff like that. Netflix has become a big part of people's lives. So I think this kind of proves that all the people, all the haters out there talking about Netflix, saying that Netflix is done growing and things like this, they just posted their best quarter ever, guys. So let's dig right into those numbers. So as you take a look here, Netflix posted record revenue, had amazing operating income, and did an awesome job. So they added 15.7 million ads. They absolutely blew their numbers out of the water, and that's 22% year-over-year growth, guys. So, quarter one is always usually a strong month for Netflix anyway, and the fact that they added so much is ridiculous. So actually, free cash flow improved because they had to shut down a lot of their offices and stuff like that, and Netflix is notorious for spending a lot of money on content, but with not being able to really produce as much content, that actually helped free cash flow a bit. So he talks more about the results in depth. So I just want to point out some highlights. And one of the things that I like to talk about is simply if we take a look at average revenue per user, so that grew 8% over year. So one of the nice things is people don't understand about Netflix is that they have the power to raise prices. So as long as they're continuing to grow their subscribers year over year, they can continue to raise their prices year over year as well, and that will keep the revenue going up even if subscriber growth slows a bit. So as you can see, guys, Netflix is just a company that as long as they have subscribers, as long as they have a loyal audience, they can continue to raise their prices and do very well over the long run. So as it talks more, it says there are three primary effects on our financial performance from the crisis. First, our membership growth is temporarily accelerated due to home confinement. Second, our international revenue will be less than previously forecast due to the dollar rising sharply. And third, due to production shutdowns, some cash spending on content will be delayed, improving our free cash flow, and some title releases will be delayed, typically by a quarter. So as you can see here, Obviously, the lockdown sent a lot of people home, and that sent an absolute explosion in signups. Now, what I'm thinking is that a lot of people that were new to Netflix in general, perhaps they decide to just keep their subscription, even as we do a soft open around the world as things start to open back up. So in China, I believe they were locked down for about 2 to 3 months. So assuming we're going to see the similar thing, approximately in most other countries, I would expect a lot of people to keep their Netflix subscriptions anyway. And one of the nice things about Netflix is that they still have a lot of content in the pipeline, and they had a couple big releases as well. They in the Q1 they released their Ozark 3. Tiger King was a big hit. Murder, Mayhem, and Madness. Their unscripted dating show, Love Is Blind. So they had a lot of nice things that in Money Heist as well. Money Heist has always been a big hit for Netflix. So they had a lot of nice new content coming out. So even though they're not currently making a lot of content, they had enough new stuff on the platform that people new to it or existing members who hadn't been watching lately, they have stuff to watch. And of course, once things open back up, they have a lot of things planned in Q2. So the good thing about Netflix is their content's never stale. They're always innovating. They're always coming up with new ideas. And I think things like an unscripted dating show and stuff like that, kind of new things that Netflix is kind of tinkering with, that they can find some success. So also, they also recently rolled up a top 10 popular list, which is another awesome feature as well, because in my experience as a media and content creator, top 10 lists do extremely well. So that's nice. So as we get back to the numbers, we can see free cash flow has improved a lot, and that is showing that when Netflix is not spending as much money on content, they are an absolute revenue juggernaut. So it's just great to see Netflix. Even if they're not spending as much money, we can see that this company can obviously work on profitability by spending less. But Reed Hastings and the Netflix team, they're adamant on spending money on content. So we expect these numbers to the free cash flow to probably dip back negative, probably in Q3 and Q4. So as we keep going down, we keep seeing some nice things. I want to show you guys the actual numbers. So this is what kind of jumped out to me. If you take a look at this, you can see that where most of the net additions were. So as you take a look here, we have United States, North America region, so 2 million. But Europe and the Middle East was a massive winner for Netflix. They added almost 7 million people in that region alone. And then Latin America was very pretty good as well, 2 million, and then 3 million, and around 3 million or so in Asia. So that Europe region was a really strong grower for Netflix. And I don't know if you guys saw, there have been reports on how Netflix was taking down the internet in Europe. So that's a huge good sign for Netflix, that they're growing not just in the emerging markets, but that they're still growing in more of the developed world and stuff like that, and growing big in the Middle East as well. Another great spot. So if we take a look at some of these numbers, we can just quickly go over. Earnings per share was great this quarter. Basically, this was an excellent quarter in a pandemic type situation where the whole world was at pause and people were tragically affected by this virus. The fact that Netflix did some things like completely grow their subscriber numbers and even grow their retained earnings. So as you can see here, guys, retained earnings is one of the most important metrics you can look at when you're taking a look at a balance sheet. You want to see that number increase. That means the company is generating earnings over the long run. And of course, Netflix is well cashed up. So as you can see here, holding over $5 billion in cash, they'll be just fine and will be able to ride out this storm. So guys, overall, just really excellent stuff here. As you guys can take, here's a quick another good breakdown of the numbers, and just an overall impressive quarter from Netflix. Wow, I'm really impressed by these guys. I talked a lot about how Netflix is one of these hyper growth stocks with an overall compounded annual growth rate of over 40% annually since the stock has been public, and we can see why. They continue to impress, and they continue to do well. I mean, even in pandemic times, they're doing well. In normal times, they're doing well. So this is basically what this looks like. Is this is a recession-proof stock, and the fact that they're so diversified now, and that they're an international company with subscriber growth, added at least 2 million subscribers in every single region of the world. They're so balanced, and if it weren't for the dollar rallying, we would have seen a lot more revenue from these other parts of the world. But of course, they had the currency exchange and stuff like that, so that kind of hurt their revenue numbers. So when the dollar, maybe we have a strong dollar right now, due to people running to things like treasury bonds and stuff like that. Once things kind of go back to normal in a year or so, as long as Netflix is able to keep growing these numbers, we could see a massive explosion in revenue. So guys, like I said, this is just an awesome quarter for Netflix. For me, I'm a shareholder. I really don't plan on selling my Netflix stock simply because it's one of those hyper growth stocks. And I'm going to be talking a lot more about hyper growth stocks in the future on this channel. I know a lot of you guys out there are millennials like me, and I know a lot of you are interested in companies that are going to compound annually and 40% plus. So that's your Netflixes, that's your Rokus, that's your Shopify's. And we're going to be talking a lot more about these stocks. I'm going to be covering them in depth during their earnings. So now, where do I think Netflix stock is going in the short run? Well, for me, I started my first position at around $289, and I've been slowly adding to it on dips. So what I'd like to do is I'd like to do dip buying. So for dip buying, for me, as you can see here, when the price comes down to around these levels, it hits around support, I'm usually picking up, adding to my stake. Sometimes I buy fractional shares, so I can buy fractional shares, which means I can put in a little bit of money. If you don't have, $400 a share and you're buying other stocks as well, you can put maybe $10 here, $50 here, $100 here, and that's how you can slowly build up your position. So I've been like dip buying here anytime because I know Netflix in the long run is basically recession proof, just it's going to be better. And with the 5G networks coming up, Netflix is going to be, so many more people are going to be on the Netflix platform. So, I know I'm thinking about that in the back of my head. So anytime it's dipping, I'm buying. So right now we've seen some resistance at around $450. We actually hit $450 in after hours trading, but the stock has come back down and stabilized. So where do I think Netflix stock is going in the short run? Well, I think for sure with people basically being scared out of a lot of these other stocks that are currently trading. So you've got a lot of stocks like Coca-Cola had some really bad numbers, banking stocks had bad numbers, cruise stocks, all the travel stocks. I think a lot of people are going to rush to the safety of Netflix. And like I said, it's been the top performing stock over the last decade. So there's a lot of safety here. If you buy Netflix stock, you're probably going to do pretty well. And those ridiculous compound rates don't lie. So as I would say, guys, I think Netflix is still a strong buy. I think these numbers just show how powerful the company is. And I think we're going to 500 definitely. Now, I don't know exactly when, but I said the same thing about Netflix stock when it was around 200. Will it go to 300? It went there. And then people are saying the same thing around 300. Will it go to 400? So as long as Netflix continues to add subscribers, as long as they continue to create awesome content that people enjoy, I don't see any reason why we won't be hitting around $800 to $1,000 within the next couple of years. So basically, you want to get on this train. Now, obviously, you want to do your own research. In the past is not indicative of the future, but we just saw probably the biggest type of crisis that we've had in a very long time. This has affected every corner of the earth, and the company has record as subscriber growth, record revenue. So that's how strong this company is. This is a real deal company. And if you guys are looking for one stock, one high hyper growth stock that can get you 40% annual compounded growth rate return, if you're looking for a top investment, Netflix is definitely up there. It's really hard to go wrong with this type of company. It's just excellently run, and it just really is recession proof. The kind of the job they made from moving everything from the mail-in DVDs to the internet and getting everybody subscribing on a monthly subscription was just a brilliant long-term strategy. So that's it for now, guys. I hope you enjoyed this video. I think Netflix is a very, very strong buy. It's going to be interesting what we see in the trading session. There's resistance at $450, and if Netflix breaks through that resistance, it could go much higher. So let me know what you guys think in the comments about Netflix stock. Just leave your comments below, and give me a thumbs up if you enjoyed this video, and subscribe to my channel for more videos on Netflix stocks and other hyper growth stocks that can get you 40% annual return or more. I post videos like this on this channel every day, so be sure to stay tuned in. So that's it for now, guys. I hope you enjoyed this video, and take care.